Alrighty guys, welcome back to another video. Haven't done a video like this in a little while. We're going to be doing a back testing video today, and it's probably over a strategy that you guys haven't really heard of before. So this strategy is called the Sniper Simplicity strategy, and it is from Apex Investing. Okay, so basically Apex Trader Funding has another company that is called Apex Investing. Okay, I've made videos similar to this before. You guys may remember this chart, right? We've gone over this chart before for backtesting. Today we're going to use their other strategy called the Simplicity chart, which we're going to go over. Okay, so this allows for a lot bigger gains, and it can be a good strategy. So just going to kind of go over every single potential trade for an hour or two in a market that's open. And the way this trade works is it takes into consideration options, volatility, and basically just the options and the market. Okay, so this what you need for an entry is a solid line and the dash line to be the same color, and you need for them to be pointing in the same direction. So for a short, we'd need the solid line above the dash line, and then both to be pointing down and red. Okay, and for a long trade, we need them both pointed up, both green, and the solid line to be underneath the dash line. Okay, so yeah, we're gonna go over it and we're gonna walk through. So we'd wait till about 5 minutes after the market open, okay, and then we'd go from there. So we can see here, both pointing up, solid line is below the dash line. So if we break this high on the next candle, we'd take an entry. Ideally not into one of these levels that's on the chart, but we'd take an entry there, and our stop loss moves. So generally, we'd target one of these next levels, or we'd stop out if we get a candle closure below where we entered at this solid line. So the solid line's down here at 836, so we would stop out there. So right around 836 there. So that's a minus 10 point trade, which is okay. All right. But if usually to be safe, what I do is as soon as we start changing colors, so our entry was here. Once we break below the green line, it turns red. You can see this candle broke below it. I usually take an exit just to be safe, because usually it means we're moving back down. And then you can see here, we have the red, they're both red and angling down, solid lines above the dash line. So we take an entry as soon as we break below that candle, which would be right here. And we'd want to target basically the next level. So if we hit a level on the chart, that is where we'd get out, or if we break above this solid line, close above it. So right here is basically where we'd exit. So 15 point winner. Okay, so even if we took the 10 point loss here, we'd still make it back there. Here we can see they're both angling up. Solid again is below the dashed. So as long as we break the high, which we don't. Here, not really angling up, that's kind of flat, so I wouldn't take that. This one though, this is angling up. So if we break above this high, which we don't again. Here we do, angling up. If we break above the high, we enter. There's an entry. Again, this settlement's a very big level. You don't really want to be trading into that. Right now it's about 5 points up, so you could scale out there or have this target be your main target. We do hit that though. That's probably a good place to get out, so for about 6 points there. So currently we can keep track here. Let's keep track. So I have basically a whole list of all the, from a long time ago, of trades, right? And it's, obviously you can go on some losing streaks, but if you target 20 points a day doing this, generally speaking, it doesn't take a lot of trades. You can see some days it takes a lot of trades to hit those 20 points on choppier days, right? This day here, December 19th, going into Christmas week, right? Took a lot of trades. I wasn't taking into consideration news or anything, but yeah, generally just a couple trades, sometimes one trade, that's all you need. So far we have a we'll just say we'll say an 8-point loss for that first trade. We'll give it a little room. 15-point win and a 6-point win. So we're keeping track of those. And generally speaking, again, if you don't want to take your profits out at a level like these, then you would hold it until we get a closure below the solid line. So right here, you'd exit because we closed below this green line right there. Okay. It's going to keep going. You can catch very big trades with this. Very big trades. Like 50, 60, 70-point trades sometimes. Both angling up here. If we crack the high, could be an entry. Nope, we don't. Here we do angle up very nicely. If we crack the high, which we don't again. So it does prevent some chop a lot of times too. Here we're angling down. Again, you wouldn't really want to trade into settlement. You'd want to wait for us to get below that. But for the sake of this, we can take it just to show you. So our stop would be at 51. And again, settlement right there. We wouldn't want to take a trade into that usually. But we'll just say we do. And we'd actually exit there for break even because we broke back above the solid line. So it'd be a flat trade. Here, both angling back up. So if we get a crack of the high, which we do, right at this level, which isn't ideal, but generally, if we're entering at this level, we want to target this next level at 59. We do hit that. So right there, we're already at 23 points of profit on the day. You can see that right here. Minus 8 points, then a 15-point winner, 6-point winner, 10-point winner. We're at 23 on the day right there. And it's 9:18, so 45 minutes after the open. But we'll just keep going a little bit. Both angling down. Have some room to the next level. So we enter once we crack the low. And we'd ideally target this settlement right here. So like a 7-point trade. But you could also trail it, which you'd actually exit there anyways for whatever. So now we're 30 points on the day. You should cut it at that point. You're up 30 points and walk away. So here we're both angling up. We do crack the high. We're right at settlement. So not a great spot to enter. I wouldn't want to do that usually. If we close below the green line, which we do, so we can count that as like an 8-point loss. But again, usually I'd never want to enter at settlement, so ignore that. Any huge level, any settlement, walls, things like that. So both angling down here, starting to get some momentum picking into the market. We do crack the low, so technically that would be an entry. Although it looks like we're bottoming out there. And that would be about a 13-point loss. So now so obviously we were up 30 points on the day, now we're up like 10 points. Okay, so stop while you're ahead. Both angling slightly up there. We don't crack the high. Here, still angling up. We do crack the high there. Can take an entry, stop would be 43. Targeting this next level, that's about 9-point win. Angling down here, again going to this settlement level, which we want to get away from. But that would technically be an entry, which would be 4-point loss, right? Couple-point loss. Again, we could have avoided both these big losses here, 7 points and 4 points, if we just didn't trade around settlement. Or waited to move away from these levels. All right, so another entry is right here, 56. Stop would be 50. Target this next level. If you let this one run, this is what I'm talking about. We entered here 56. It's up at 82 right now. We're just trailing our stop with this solid line here. So as soon as we get a closure below the solid line, you'd probably want to take profits at this deviation level because deviation levels are pretty important. So that's a 32-point gain. So there you go. Catch big winner. We'll go a few more minutes of this. So just want to give you guys a good idea of a strategy that I know you probably haven't heard of because it's not very well-known strategy. So angling down on this candle, we crack the low. It'd be a short opportunity. Stop at 90. We actually would stop out there. little 7 point loss. No trades. Angling down here. Another short opportunity right here, 80. Try and run it down towards this green 59 level if we can. Right at 75, and then we start to come back up, and we'd stop out there at 80. That's a break-even trade. Angling back up here. No entry because we didn't break the high. Now we're angling back down. So potential opportunity short here if we break the low. Nope, another opportunity here. We do break the low, but already jumping right back up. So potential 7-point loss there. Again, you would have stopped hopefully a while ago while you were up all this much, right? No entries in here. You could say that wasn't even entering. Yeah, that wasn't up, so no entries up there. Angling down here. Short opportunity here. And again, target this 59 level if we can. Boom. 20 points, 21 points. So the winners do usually make up for the losers. That's good, right? We'll go till 11 o'clock. Now angling up, slightly angling up there, slightly angling up here. So since you're angling up right here, let's see that there. You'd usually want it a little steeper, right? Enter there, 75. Target this deviation level because deviation levels are a great spot to take profit. Unless we crack below the solid line. Okay, so we crack below, that'd be about break even. Yeah, that'd be a break even trade. There's a short entry here. Again, the steeper they are, the better. So this one's pretty shallow. We haven't actually broken, I had a close above this red line. So if we look at where this red turned to green, it's at 69.25. We haven't had a close above, okay? Until there. So about 3-point profit, nothing much, basically break even. Angling up here, enter long at 73, 74. Try and ride this up to the deviation level if we can. Boom, deviation level, 16-point trade. All right, so that's 11 o'clock. So sum up the day. Okay, let's sum it up. So total, 71 points of profit until 11 o'clock. Obviously, not every day is going to be this good, right? I think everyone should know that, right? Not every day is going to be this good. But 71 points, one contract to be safe because, you know, there can be big drawdown with this, right? So if we do this here, biggest loss on the day was roughly 300 bucks ish, which isn't actually too bad. Biggest win was 640, and again, you probably would have stopped while you were up earlier. Once you're up 20 points on the day, I mean, that's a pretty good day. And let's see the win rate. We had a total of, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 trades, and we had 6 losses. So 15 trades, 6 losses, that's 9 out of 15, so 60% win rate. Right, pretty good, 60%. So overall, that's a pretty good day. This is today, actually, February 8th. So yeah, if you guys enjoy this video, you want to see more of this strategy, please comment below and like the video. I'll also be starting to do a little bit of live streams with this strategy around lunchtime. And then I'll occasionally like peek it on the screen in the morning sessions. But just want to give a little heads up to everyone of a potential strategy you can use. So yeah.